Hey, morning from the CME Group. This is Peter Yastrow. It's February 28th, and we got one more day of February. This year just seems to be dragging on all over the place. But we got a big week coming, and the biggest news of the week will be the unemployment report on Friday. Now let's remember, we had a really strong unemployment report last time. It caught some people by surprise, and of course you got those of us who are saying, hey, it's all a mirage. Don't start drinking the sand. So here we are coming into this week's report. This will either be the big, oh my God, the economy really is recovering, or it's going to be this is a mirage and you've all been drinking the sand. It's a huge report, and we're going to be looking for it Friday morning. Until then, we're going to be looking at a few other things. The most interesting is the way the euro is now strengthening. Yes, that's right. They got Greek to take a really bad haircut. I know about bad haircuts. It's obvious from the way I looked this morning. And bad haircuts mean that nobody defaulted, or then the people who own the credit default swaps ended up not getting paid. Isn't that a bummer? Be careful. It's all politics and nonsense over there, and it's not done yet. It's going to spill over. It's going to be a mess, but we pretty much have it insulated. Remember, even if they take Greece out, they take Portugal out, they take a couple other countries out, it's not like the euro goes to zero. So what does that mean? Well, now that they've realized that the euro is never going to zero just because some of these countries can't pay their bills, we start to see the impact on global commodity markets. Why is oil so strong? The U.S. economy is recovering? No. Oil is strong because the euro is recovering. Most people price this stuff all in euros now. They started moving away from the dollar years ago. Remember when the famous model said she didn't want to be paid in dollars anymore, she wanted to be paid in euros? Well, as that happened, the correlation between euros and the oil prices, to those of us who look at the world through dollars, has gotten amazingly strong. As the euro is strengthening, the commodity prices are strengthening. That's what this is all about. That's going to be the big news, and we're going to be waiting to see how this stronger oil price ends up hurting American consumers. That's a little further off too, but we've got a lot of things to worry about now. Oil prices heading higher. We know the unemployment report's about to have a big readjustment this week, and we've got earnings starting to slip on equities. So right now, the last place in the world to be hiding is U.S. equities. We're going to try and stay in the U.S. equities for a little while longer, but eventually these earnings numbers are going to start to come in lower, and interest rates are going to not stay at zero forever, and stocks we're going to have to abandon. Until then, stay in stocks, be leery of anything European, and try and avoid bad haircuts. From the floor of the CME Group, it's Peter Yastrow.